You have probably heard that turning $100 into 10,000 takes luck, risky overnight trades, or an endless grind on a side hustle. Most retail investors burn their starting capital on low-leverage jobs that trade hours for pocket change, essentially performing low-wage labor under the guise of an entrepreneur. We are going to walk through 15 specific asymmetric systems designed to turn small capital pools into five-figure asset bases. This diagram illustrates the core mechanic behind all of them: asymmetry. By leveraging digital real estate, market arbitrage, and capital compounding, a tiny amount of input on one end lifts a massive return on the other. Scalable wealth requires building systems that disconnect your earning potential from the hours you work, rather than committing to a lifetime of continuous labor. Take System 1, domain arbitrage. In 1998, two investors bought beer.com for $80,000. 1 year later, Interbrew purchased it for $7 million. Domains operate as the commercial real estate of the internet. You do not need $80,000 to start today. You look for emerging niche trends, secure highly targeted domain names for $10 or $20, and list them on institutional exchanges like Flippa or Cito. Looking at this chart, you can see the math clearly. A $10 acquisition cost compared to a $500 return means just one strategic sale covers your initial cost 50 times over. Which leads us to System 2, zero inventory microbrands. Holding physical inventory burns through your working capital before you even know if people want to buy your product. Print-on-demand mechanics eliminate that manufacturing risk entirely. You design digital assets for ultra-specific hyper-niches, like engineering groups or sports communities. Here is the exact sequence. You create the digital design, run targeted ad testing to measure response, wait for the customer's payment to clear, and only then scale the final fulfillment. These digital systems remove traditional overhead risk. You test ideas cheaply, validate the demand, and turn a proven concept into scalable equity without paying for a warehouse. System 3 applies this to the physical world, asset flipping. In 2015, Ryan Pineda bought a used couch for $200, cleaned it up, and resold it for $400. He reinvested the profits, turning a simple restoration habit into a multi-million-dollar real estate portfolio. Inefficient local markets are filled with underpriced, mismanaged inventory. You source neglected furniture from estate sales or thrift listings, apply minor repairs, and relist the asset at true market value. System 4 is disciplined microtrading. 90% of retail traders blow up their accounts within 90 days because they treat financial markets like a casino. This risk grid shows the difference between gambling and investing. Enforcing strict 1 to 3 position sizing guardrails isolates a safe trading zone against the volatile market line. Master technical analysis and log every trade. Compounding small asymmetric wins block by block scales account balances safely. Whether you are restoring a used couch or trading Forex, the wealth pattern is identical. You identify mispricing, apply a strict set of rules, and protect your downside. System 5 is high-margin mobile detailing. Premium suburban neighborhoods are packed with high-income households that have zero free time. $100 buys your core cleaning compounds and microfibers, which you take directly to the client's driveway. You document your first 5 jobs with clean before and after photos and post those visual proofs into high-income community groups. High quality yields immediate local referrals and recurring monthly service retainers. System 6 is collectible thrift arbitrage. Retail stores regularly misprice specialized inventory, like vintage electronics or rare media. This data visualization compares a static thrift store price tag to the historical online sale price of the same item. You use completed online sales data to verify historical demand before spending a single dollar. Combining historical demand data with visual proof anchors your pricing and reduces the risk of market miscalculation in local environments. System 7 is skill monetization. If you can write, code, or design, build a clean portfolio site and target mid-sized businesses directly. Avoid low-cost bidding platforms where prices grind down to zero and focus on companies with ready operational budgets. We see the same margin expansion in System 10, Reworked Apparel. Raw thrift garments carry low market value, but customized or vintage curated pieces command high margins. Look at this value add formula. You take a small base cost, add a specific design modification, and precise market targeting drives a significantly larger targeted margin. When you apply specialized skills directly to raw, low-value materials, you create a margin between the acquisition cost and the final sale price that labor alone cannot achieve. System 8 is micropublishing. Broad books compete in crowded markets, but highly technical, niche-specific guides, like specialized software manuals or regulatory checklists, face almost zero competition. System 9 is outsourced local media management. Small business owners lack the operational bandwidth to manage content. By systematizing their weekly content distribution and handling customer inquiries, a few local clients transform into a stable, recurring income engine. System 11 is leveraged affiliate distribution. Distributing established, high-margin software takes only an audience and clear messaging. You build detailed, problem-solving content around specialized software tools. This diagram maps the referral loop. A viewer enters your educational workflow, clicks a trackable link to adopt the software, and triggers a continuous loop of monthly commission payments. Digital content functions as an operational clone. Once online, the asset yields continuous cash flow with zero marginal distribution cost. System 12 is targeted academic coaching. Parents and professionals pay top dollar for targeted results. Package your expertise in advanced mathematics or technical certifications into structured remote coaching modules to eliminate operational overhead. System 13 is micro-event organizing. People pay for structured experiences. You partner with local venues to host curated networking mixers or specialized community workshops. This pie chart breaks down the financial logistics. The incoming ticket sales fill up the production costs completely, leaving the remaining massive slice as pure profit, while the venue handles the space and concessions. Structuring specialized knowledge and curated experiences commands premium pricing from high-income demographics because you are delivering specific targeted results. System 14 is fractional index compounding. If your objective is low-risk, long-term capital expansion, speculative trading is not required. You deploy your capital into low-cost, broad market index funds, or fractional equity shares. Set up automated monthly sweeps. Over time, reinvested dividends and market growth compound small starting pools into substantial wealth. System 15 is niche audience building. A focused audience of 5,000 highly engaged professionals is far more profitable than 1 million disengaged viewers. This scatter plot compares generic audiences to targeted ones. High-density audiences of business decision-makers directly attract premium B2B sponsors willing to pay for direct access. The heavy concentration of capital or audience density is far more valuable than mere size. Holding $100 bills in standard low-yield accounts guarantees that inflation erodes your purchasing power every single year. You can keep letting your capital sit idle while expenses rise, or you can start deploying it into asymmetric growth engines today. Stop operating on retail assumptions and start building your engine for long-term financial freedom. Subscribe to the Money Formula right now. Drop your primary takeaway in the comments below and start executing.